Now SA 720 is there, one more standard, very easy standard, very simple standard. SA 720, we did not understand this standard yet. Now let us try to spend some time in understanding the concept of SA 720. Okay, right. So I'm going to start my discussion now. Everybody, please remain attentive so that this is going to be interactive. This is going to be engaging. So just I need all your attention here actually. Okay. Sir, what does SA 720 deal about? So as usual, what we used to do when we previously discussed the standards on audit, what we used to do, first we will try to understand what is the purpose of the standard, why the standard has been given, the purpose and objective of the standard, we will make it clear. Why? Because once we understand what is the purpose of the given standard, with what objective the standard has been given, it becomes very easy for us to interpret the content whatever has been given in the standard. So we follow the same approach even for this standard also. First, we will try to understand what is the purpose, why the standard has been given, and what is its objective. What does the standard talk about? So these two things, if we become clear, the content in the standard automatically becomes clear. So first, if you have a look at the title, SA 720, the title says the auditor's responsibility relating to other information. What the standard is telling? The auditor's responsibility relating to other information. Sir, what is this other information? This standard is trying to explain what duties auditor is required to fulfill, or what responsibilities auditor is required to fulfill regarding other information. Now, before we can understand what are the auditor's responsibilities regarding other information, we need to understand first what is other information. In the context of this standard SA 720, they are telling something called other information. What exactly is the meaning of other information? That we have to become clear. Sir, what is this other information? So let me tell you here, just let me add one more note here for SA 720. Right. So what is other information? Let us try to understand that first. Right. See, we all know about audit, right? So generally what will happen? What is the entire process? Once the year gets closed, what happens at the organization level? Take for example, we'll try to understand with the help of example of one company. Take for example, there is a company, Adani Enterprises. Okay. So this company, Adani Enterprises, take the financial year 23-24. When the financial year will come to an end, as on 31st of March 2024, financial year will come to an end. So once the financial year gets closed, what will happen? Financial statements will be prepared. Sir, who will prepare the financial statements? Tell me, who will prepare the financial statements? Management will prepare the financial statements. And they will approve the financial statements and all. Finally, a copy of the financial statements will be given to whom? To the auditor. Now, what the auditor will do? Auditor will verify the financial statements. On that financial statements, he will express his opinion. That opinion will be expressed in the form of audit report. So auditor will give the audit report. So now the management will be having the copy of the financial statements. The auditor has conducted the audit. He even gave the copy of the audit report also. Now, what is the purpose of getting the financial statements audited? Once the auditor has given the audit report, should the management take that audit report and keep it safely in their lockers? No. What is the purpose of this audit report? Why? Because as we all know, the purpose of audit is to increase the confidence of the users of the financial statements. As an independent person, you will verify the financial statements and comment whether they are giving true and fair view or not. So that will make the users of the financial statements to get more confidence on the financial statements. So the purpose of getting the audit done and generating the audit report is to circulate that to the shareholders. Yes or no? Okay. So now the management will have a copy of audited financial statements along with the audit report. Now this audit report along with the financial statements, we call them as audited financial statements. So when I say audited financial statements, what do I mean by that? The financial statements along with the audit report, both put together, I call it as what? Audited financial statements. Now, these audited financial statements are required to be circulated. These audited financial statements are required to be circulated. So, to whom it will be circulated? It will be generally circulated to all the stakeholders, and one of the major and important stakeholder who is very much interested to know about the financial statements and the auditor's report is shareholder. So, we'll talk from the perspective of the shareholder. So management will prepare audit, get it audited, audited financial statements will be there. Now these audited financial statements are required to be circulated to the shareholders. Now how the management will circulate it? Do you think management will take a printout of the financial statements, or they will take a printout of the audit report and they will send only the financial statements and audit report to the shareholders? Or will they have only soft copy of the financial statements and auditors report? This soft copy is only they will mail it to the shareholder? Generally, no. Now, what the companies will generally do is, once they get that audit report, once they get that financial statements, they will prepare something called annual report. They will prepare something called what? Annual report. Now, this annual report will be some 300-400 pages of annual report will be there. 300-400 pages of annual report will be there. So now in that annual report, so much of information will be there. Like, it will contain details regarding their board of directors. It will contain what they have done for the entire year. It will contain details regarding what they are going to achieve in the coming 10 years. They will also try to explain some analysis of the profits and all. They will try to explain what major decisions they have taken. They will try to explain what amalgamations, what acquisitions they have done. Along with that, they will try to explain something called MDA. They will try to explain their management analysis. There will be something called board's report. There will be something called CEO or CFO certification. So all that contents will be there where in the annual report. Somewhere along with that content, even what will be there? Financial statements and audit report also will be there. Financial statements and audit report also will be clubbed into that annual report. And once again, after the clubbing of this financial statements, once again, some other information also will be there. So generally, when management wants to circulate the audited financial statements to the shareholders, they will not just give the copy of the financial statements, they will not just give the copy of the auditor's report. What they will do is they will prepare something called audit report, which will be a very bulky document, some 300-400 pages of the document they are going to create. In that document, lot of information will be there. In that lot of information, one part of the information is financial statements and audit report. Now, this annual report will actually be circulated to the shareholders or various stakeholders of the company. This annual report will be circulated. In that annual report, one of the component is the financial statements and shareholders. One of the component is what? Financial statements and shareholders. See, I think we have already seen earlier annual reports. But anyhow, for the sake of your confidence, let me show it once again. Let me show some annual report once again. So we'll do one thing. We'll take Reliance Industries Limited audit report. Annual report will take, sorry. Come on. I think we should already have it. We have loaded it earlier. So let me check. Will I be able to find it somewhere here? Top language professional ethics. No, it's not there here. Just give me a minute. Is there any search option? Okay. RIL. Yes, we already have it. No need to download once again. Yes. So if you see here, this is the annual report of Reliance Industries Limited. This is actually the Reliance Industries Limited annual report. If you see here, how many pages are there? This is 247 pages, they say, but here the pages are a bit different. 2 pages combinedly, they will count it as one in the soft copy. But let me take you through it. So this is what the entire annual report. So if you see the contents, I think I have already taken you through the contents. So if you have a look at that contents, let us see what they are saying here in the contents. So there is something called corporate overview. In that, they will explain what do you mean by Reliance? What does a Reliance company do? At a glance, they will try to explain about Reliance, how they are creating the value for their stakeholders, what are their key performance indicators. A chairman and director statement, the managing director or chairman's a statement will be there. He will try to explain. We care for an inclusive ecosystem. What is their core area? That they will explain. We care for digital transformation. We care for sustainable value creation. We care for a greener planet. Nothing but how they are contributing to the country, how they are contributing to the globe. They are telling. COVID-19 responses, what risk they have faced during COVID-19 and how they are going to respond to it. And they will give a list of all their board of directors. And they will explain what is their model, value creation model, what is their strategy, what is their ESG. We have a separate chapter. I will explain about that later. Reliance Foundation, they have even trust which carries out the CSR activities. They will talk about that Reliance Foundation. We nurture startup ecosystem, how they are going to add value for the startups that they are explaining. 10 years of financial highlights, what they are going to explain in the annual report. 10 years of financial highlights they are going to explain. Then they will have something called MDA, management discussion and analysis. Then they will have something called financial performance and review. Then they will have something called business overview. Then after that, not just that, let us see, so much of other things are there here. So business overview is there. After that, risk and governance, awards and recognition, what awards they have got, what recognition they have got. Then something we have ESG, growth in Reliance, care during COVID-19, what is their integrated approach, what are their material issues. They talk about various kinds of capital, and they talk about the finance capital, and then finally they talk about governance, report on corporate governance. Then they will have something called board's report. Finally, at the end, you will be able to find the standalone financial statements, consolidated financial statements, along with that audit report. So generally, our financial statements, whatever financial statements that we have verified, whatever audit report is there, that will not be given separately to the stakeholder. That will be clubbed together in the financial statements. That will be clubbed together in the annual report. Now this annual report, whatever this annual report is there, this annual report will be given to the stakeholders. Now you tell me, in this entire annual report, what is the thing which auditor is concerned with? What information did the auditor verify? As an auditor, did you verify all that information which is there in the annual report? So I'm asking a simple question. This annual report will be given to the stakeholders. My question is, do you think auditor would have verified all this information? No. Auditor would have verified only standalone financial statements, consolidated financial statements. He would have verified only the financial statements. Apart from this financial statements, whatever other information is there in this annual report, that is what the other information which SA 720 is talking about. In this annual report, apart from the financial statements, apart from the audit report, whatever else has been stated, that is what we call it about, or that is what we are going to call it as other information. And regarding that other information, what are the responsibilities of auditor? That is what SA 720 is going to talk about. Everybody able to understand the context? Did you understand what do you mean by other information? So if you take it here, all this corporate overview, this is completely other information. Management discussion and analysis, other information. All this shit whatever they have given, this is also other information. Only the thing which is, this is also board of report on corporate governance, board's report, this is also other information. The only thing which auditor would have verified is standalone financial statements, consolidated financial statements. Apart from this financial statements, apart from the audit report, whatever other information which is there in this annual report, that is what we are going to call as other information. And regarding this all other information, what is auditor's responsibility? Regarding all this other information in this annual report, what is your responsibility? That is what SA 720 is going to talk about. Everybody clear with the discussion, clear with the responsibility, clear with the objective of the standard. What is the purpose behind the standard? What exactly is this standard talking about? Did you get the purpose? If you get the purpose, I will proceed further. Did you get the purpose? Yes. Very good. Now, let me ask you one simple question. Okay, I have told you what is other information. What is other information? I have explained. Now, other information plus financial statements, everything will be there in the annual report. Very good. Now, as an auditor, what you will verify? Definitely, we are going to verify the financial statements, and our opinion, whatever has been expressed, that opinion will be on the financial statements. Do you think we are also expressing the opinion on other information? Do you think we are also expressing an opinion on the other information? Our opinion has nothing to do with the other information. Our opinion has nothing to do with the other information. As an auditor, our responsibility is to express only opinion on the financial statements, and whatever opinion we have given, whatever audit report we have given, that audit report is only containing the opinion of the auditor on the financial statements. Auditor's opinion does not have any reference to the other information. As an auditor, we are not supposed to express any opinion on the other information. Okay. This thing is clear. You are telling, sir, auditor's opinion should not have any reference to other information. Auditor's responsibility is completely regarding the financial statements only. Very good. Understood. But do you think auditor can simply ignore all that other information? Auditor can simply ignore all that other information. Does he not bother about it? Should he not bother about it? Should he not pay attention only? Should he concentrate only on the financial statements? No. What the standard says is, take for example, if I tell you one simple thing, see, here they are telling here, in the first page of the Reliance Industries Limited annual report itself, they have given some data. If you see here, India's largest company, they are telling what is their market capitalization. They're telling what is the revenue they had, what is the net profit they made. Don't you think I need to check once whatever figures they have given here, should are they matching with my financial statements or not? Don't you think at least I have to check it once? Here, just I'm telling you one simple example. On the first page of the annual report itself, they have told that they have a revenue of 7,92,756 crores. They have a net profit of 67,845 crores. Nothing but these are the figures which are referring to the financial statements. Don't you think at least I have to check this other information which is with the financial statements and check whether both are matching or inconsistent? Am I required to check it once or not? Yes, you are required to check it. So what the standard says is, the standard says that, okay, boss, you are an auditor. Your opinion, your audit report is related to the financial statements only. We don't expect you to express an opinion on other information. We know that that will go beyond your scope. You can't do it. That is beyond your responsibilities. We do understand that. Even the standards are also telling, boss, you need not express your opinion on other information. But we will tell you limited responsibilities. You do that. You have fulfilled your responsibility. Don't express the opinion, but we will tell you a few limited procedures regarding the other information. If you do that few procedures, we will feel that you have fulfilled your responsibilities properly. Then what is that limited procedure which I have to do regarding other information as per SS 720? Just you have to read it once. Just you have to read that other information once. Just you have to go through that other information once and try to match with financial statements. Just what auditor is supposed to do? Auditor is supposed to read. Is our notes here? So what SS 720 is telling? Auditor should read what? Other information. Auditor should read with other information, and if at all you find any information which is having relationship with the financial statements, you need to compare whether that other information, whatever has been stated in the annual report, is it matching with the financial statements, or there is any inconsistency. We need to read the other information once, and we need to see whether there is any inconsistency between other information and the financial statements, or is there any inconsistency between other information and what you know about, whatever evidence you have gathered, whatever information you know about the company, and whatever information they have presented in the other information, is there any inconsistency? That we need to find it out. Sir, what do you mean by finding out the inconsistency? Take simple example here. Here they have told in the other information they have a revenue by 7,92,756 crores. Just what I need to check is I have to open my statement of P&L and check in my statement of P&L also total revenue is 7,92,756 crores only or not. And here they are telling the profit is 67,845 crores. Even I have to open my statement of P&L and check that in my statement of P&L also the profit is 67,845 crores only or not. So just I have to read this other information. So when I say other information, all this information is there. Just to go through the other information once and try to compare whatever information that is there in the other, whatever data that is there in the other information and whatever data that is there in the financial statements, are they both matching with each other or they are inconsistent, or there is any differences. Or sometimes by performing the audit, see, basically when I perform my audit, I perform risk assessment procedures. By performing risk assessment procedures, I will come to know about the business. Okay, this is what the client's business is. This is what client is expected to do. This is what the client's major operations are. This is where the client is deriving major revenue. This is what the environment in which they are operating. This is what the internal controls they are having. So while performing audit, we perform risk assessment procedures. Any doubt about it? No, we don't. We should not have any doubt. So we perform risk assessment procedures. We understand about the business. We understand about the client's internal matters. We understand about the client's customer base. We understand about client's major revenue sources. All that we will try to understand. Now, in this annual report, the client will also try to present lot of information regarding their business. They will also try to explain lot of information regarding their business. Like for example, if I give you one example, other information apart from financial statements, apart from financial information, what else they will present? I will show you. Just give me one thing. See here, Just take this global economy, Indian economy. See, while understanding the client's business, for example, you are conducting audit of Reliance Industries Limited. While conducting audit of Reliance Industries Limited, you also try to understand the environment. In what kind of environment Reliance is operating. The Reliance is into oil refining business. You understood about the entire industry. You got to know about some information regarding entire oil refining industry. Now, in this management discussion and analysis, they are telling something about global economy when it comes to Reliance Industries Limited, when it comes to oil refining business and all, how the global markets look like. They have given some explanation in the management in this audit, in this annual report. Now you already understood, as a part of your audit, you already understood about the business. You also have some evidence how the global economy is impacting the oil refining business. How the global economy is impacting the oil refining business. You already got to know it as a part of your risk assessment procedures. Regarding that, management has told something in their other information. Now, the data, whatever they have given in the other information and whatever evidence that you have got about the entity, that also might be there. In that matter also, there might be an inconsistency. When understanding about the entire client's business, you came to know that on a global scale, oil refining business is coming down. The share of oil refining business is coming down. Why? Because the various countries, various companies have concentrated on EV now, electronic vehicles now. So because of that, the requirement of oil is reducing. The supply is there, but demand is reducing. So on an overall level, at the global level, the oil refining business is not doing that much great. This is what you have understood when you studied the organization. But here in the other information, when they are talking about the global economy, assume that they might have told overall at the global level, oil refining business is increasing when compared with the previous years. This years going forward and in the coming years, we are going to generate more revenue. Demand for the oil is much higher. So like that, they have presented some data in the other information which is not matching with your understanding. So you need to read that other information to find that inconsistency also. You need to read that information to find out that other inconsistency also. So what basically the responsibility of the auditor is, when you are performing, when you are reading SS 720 simply says, as an auditor, we are not expecting you to express your opinion on the other information. Just what you do is you try to read that other information and find out whether that other information is inconsistent with the financial statements, or that other information is inconsistent with whatever evidence that you have regarding the client's business, etc. So first we have to read that other information and we have to find out, is there any inconsistency with the financial statements, or is there any inconsistency with whatever evidence that you have obtained. Okay, sir. I will read other information. I have read the other information and I found that that other information is inconsistent with the financial statements. I have read the other information. I found that that other information is inconsistent with the financial statements. Like for example, in the Reliance Industries Limited, they told in their other information that they have a revenue of 7,56,000 crores, blah, blah, blah. When I opened my statement of P&L, I am able to find the revenue of only 6,56,000. I am able to find a revenue of only how much? 6,56,000. In the Reliance Industries Limited annual report, in the other information, they told 7,56,000 crores of revenue. When I open my statement of P&L, in my statement of P&L, the revenue is only 6,56,000 crores. Now there is an inconsistency. What you need to do? Sir, I have read the other information. I have read the other information. And the other information I compared with the financial statements, but I found inconsistency. Other information is saying something, financial statements are saying something. Then what I need to do? If you find any inconsistency, you need to find out whether financial statements are only materially misstated or other information is materially misstated. Something should be wrong, no? See, when both are not matching, when this information, when other information and financial statements both are supposed to contain the same information, and when both are not matching, something should be wrong. Either the other information should have been wrong or the financial statements should have been wrong. If I have decided, see this, I will investigate further. If I find difference between other information and the financial statements, I will investigate that further. By investigating that further, I will try to find out whether my financial statements are only wrong or other information is wrong. Now, when I came to know that financial statements are only wrong, other information is correct only, but the management only tried to convey wrong information in the financial statements, then what I should do? So if you finally concluded that financial statements are only materially misstated, then you will follow SA 705 requirements. Nothing but you will try to modify your opinion, give either qualified, adverse, disclaimer, whatever it is, you will try to modify the opinion. Sir, what if other information is only materially misstated? What if other information is only materially misstated? Very simple. What you have to do is, if you find that other information is only materially misstated, you will go to the management and ask them to correct it. You will go to the management and ask them to correct it. Like for example, Sir, am I telling, I have verified this other information in financial statements. I came to know that in the statement of P&L, 6,56,000 crores of revenue is there. This is only correct. I decided that management has conveyed wrong information in the other information only. They have conveyed wrong. So what I will do here, see if I concluded that financial statements are only materially misstated, as I have told, I will take appropriate action as per SS 705. I will modify the opinion and all. Then, sir, if I decided other information is only wrong, no sir, other information is only containing something wrong. What I should do? First, I should go to the management and ask them, sir, please correct it. Whatever information that you have presented in the other information, that is wrong. That is not the revenue. Please do change that other information. Sir, management is not agreeing. Management did not correct that. Then what you should do? Then you should go to those charged with governance and ask them to correct it. You go to those charged with governance and ask them to correct it. Sir, I have told your management there is that they have presented other information in a wrong way, and I asked the management to correct them, but your management is not listening to me. You go to the those charged with governance and complain it and ask them, at least you correct it. Now sometimes what will happen is management is not correcting. I went to the those charged with governance, they are also not correcting. I went to the those charged with governance, they are also not correcting. Then what I should do? Then what the standard says is we have to consider implications on the auditor's report. Are you required to report this information somewhere in your audit report? Consider the implications on the auditor's report. Are you required to comment about this other information? Are you required to update your audit report regarding this other information? Just try to check it once. Consider the implications on the audit report. In extreme circumstances, if it is not, in extreme circumstances, if you feel it necessary, withdraw from the audit also. Generally, that will not happen. In extreme circumstances, if you feel it necessary, you can even withdraw. Even you can consider withdrawing from the audit also. Even you can consider withdrawing from the audit also. Simple, guys. Standard concept is over. The concept of the standard is over. Done. We are all done. Just we have to understand this part. So main thing what we should do, first we have to compare our other information with the financial statements. And if you find any inconsistency, we need to find out whether financial statements are only materially misstated or other information is materially misstated. If we decided that financial statements are only materially misstated, we have to take appropriate action of modifying the opinion. SS 705 will come into picture here. No sir, other information is only containing something wrong. What you should do? Go and request the management, sir, please do correct that other information. If management is not correcting the other information, go and ask those charged with governance, complain to the those charged with governance and ask at least the those charged with governance to do the correction. The management is not doing correction. I communicated with the those charged with governance. There also no any, there also I did not get any benefit there. So then what you should do is consider the implications on the auditor's report. Consider how this thing is going to impact in your auditor's report. And then finally, if possible, you even try to withdraw. But in some extreme circumstances, you can even consider withdrawing from the audit, but I'm telling you this will not happen. This will not happen, right? Clear now. And one more thing I have to explain here. So they are telling you have to consider implications on the auditor's report. You have to consider implications on the audit report. If there is a mistake in the other information and neither the management nor those charged with governance, no one is correcting the other information, then you have to make some changes to the auditor's report. Sir, what changes you will make? What changes you will make to the auditor's report? Will you give modified opinion? No. You should not give modified opinion. See, as I've already told you at the beginning, we are required to express our opinion only on the financial statements. Our opinion has nothing to do with the other information. So if the management is not correcting whatever wrong information they have provided in the other information, they are not correcting. Because of that reason, am I required to give modified opinion? No, you are not required to give modified opinion. So then how I will state that thing in the auditor's report? You are telling in case if there is a mistake in the other information and neither the management is correcting nor the those charged with governance is correcting, I have to consider the implications on my auditor's report. I have to tell that thing about I have to tell about that thing in my auditor's report. But how I should say it? Can I say that by modifying my opinion? No. Why? Because they have clearly told our opinion should refer only to the financial statements. Our opinion has nothing to do with other information. So then how I have to comment about it that other information contains a misstatement, other information has been wrongly stated? How can I explain that? How you can explain that is you have to use one separate paragraph in the auditor's report. You have to report one separate paragraph in your auditor's report with the title other information. So generally in the audit reports, you will be able to find that paragraph. I will show you that now practically. So that generally there will be one separate paragraph called other information paragraph. So in that other information paragraph, you have to comment that the other information contains something wrong there. Just you will mention in that other information paragraph, no requirement of giving the modified opinion. Why? Because our opinion should be only with regard to the financial statements. Our opinion should not be with regard to other information. But still, if in the other information there is something wrong, you have to bring it to the user's attention, not by modifying the opinion, just by giving one negative comment in the other information paragraph. Sir, what is this other information paragraph? Can you show that to us? Yes, I will show that to you. Let me show you that. So in the Reliance Industries Limited, when you come directly to the auditor's report, okay, standard all is done. Explanation, conceptual part of the standard is done. So simple, no? So when we start learning the things practically, this is what the advantage. The concepts, even the complicated concepts also looks very, very simple. See here, this is the audit report of the auditors of Reliance Industries Limited. So in this audit report, if you see here, yes, come to this paragraph. Before the responsibilities of the management, there is one paragraph called information other than the financial statements and the auditor's report thereon. They are telling information other than the financial statements, and what is the auditor's report thereon. They are trying to say some paragraph here, other information. This is what the paragraph talking about, other information. Shall we go through it once? What auditors are trying to say in that other information paragraph? The company's board of directors is responsible for the other information. Who is responsible for preparing all that other information in the annual report, apart from the financial statements, apart from the audit report, whatever information is there, who is responsible for its preparation? Management. So that they have told the company's board of directors is responsible for the other information. The other information comprises the information included in the annual report, but does not include standalone financial statements and auditor's report. Sir, what is other information in the annual report apart from financial statements, apart from auditor's report, apart from these two, whatever other information is there, all that we call it as other information. Our opinion on the standalone financial statements does not cover other information, and we do not express any form of assurance or conclusion thereon. See, whatever opinion we have expressed in our opinion paragraph, that opinion is only on the financial statements. Our opinion has nothing to do with the other information. We are not going to give any assurance regarding other information. They are very, very clearly stated here. Next, in connection with our audit of the standalone financial statements, our responsibility is to read the other information. So what is our responsibility? Only to read. SS 720 only asks us to read the other information once, not to express any opinion. So in connection with our audit of the financial statements, our responsibility is to only read other information, and in doing so, consider whether such other information is materially inconsistent with the financial statements, or is it inconsistent with our knowledge obtained in the audit, or otherwise appear to be materially misstated. If based on the work we have performed, we concluded that there is a material misstatement of this information, we are required to report that fact. In case, while reading that other information, if we find any inconsistency and if we investigate it further, if we came to know other information contains a misstatement, or if other information contains something wrong information, we'll just tell you that fact. We'll just tell you that fact. Where we will tell you that fact? In this paragraph, we will tell you that fact. And if you see here, we have nothing to report in this regard. What auditors of Reliance Industries Limited have told? They told that under this paragraph, they have nothing to report, which means what? They have verified other information. They compared with the financial statements. They did not find any material consistency. They did not find anything wrong in the other information. That's why they are telling we have nothing to report in this regard. On the other hand, if they have compared other information and if it is inconsistent with the financial statements, they investigated further and they found out that in the other information only there is a material misstatement. In the other information only there is something wrong. Then what auditors would have told here? They would have told here that instead of writing this line, they would have told that in the financial statements of the client, in the other information of the client, so and so page number under so and so paragraph, that information was wrongly stated. That they would have given a negative comment, that too in which paragraph? In the other information paragraph. Not anywhere else. They will not modify the opinion. They will not give negative opinion. Just what they will say here is, if at all they find something in the other information is wrong, just they would add one line here in the information other than financial statements paragraph. They would have added a line here, the other information in so and so paragraph in so and so page number is wrong. Just they will say that fact. Able to understand? This is what the meaning of taking appropriate action through the audit report. This is what the meaning of considering the implications on the auditor's report. Clear, everybody? So what is the summary? What we have discussed till now? First, we understood what is other information. And will the opinion cover other information or not? No, opinion has nothing to do with the other information. Then what is responsibility of the auditor regarding other information? He has to read it and check whether there is any inconsistency between other information and financial statements, whether there is any inconsistency between other information and knowledge obtained by the auditor. And by verifying that inconsistency, if you have found any inconsistency, you have to dig deeper, you have to investigate further, find out whether financial statements are only wrong or this other information is wrong. If you finally decided that financial statements are only containing a material misstatement, what we have to do, that we already know it as per SS 705, we will consider giving a modified opinion. If at all you found that other information only contains something wrong, then what you should do? First, you have to go and communicate with the management, ask them to correct them. If the management is not correcting it, ask the those charged with governance to correct them. If they are also not correcting it, consider the implications on the auditor's report. Consider mentioning that fact in the auditor's report, where you will mention that in the other information paragraph of the auditor's report. And in extreme circumstances, if you find that in other information lot of wrong information is there, in some extreme circumstances even you can consider withdrawing from the audit, but generally that will not happen. Clear? Able to understand? So this is all the content we have covered. Understood, everybody? If you are clear with the concept till here, I will proceed further. I need a response from you all, guys. Please give me one quick confirmation. Who are on live, please give me confirmation. Are you able to understand the concept of SS 720? How does the standard feel now? Are you able to understand the concept? Are you feeling the concept as interesting? Just give me one response. We'll proceed further. Yes. So now with this background understanding, we'll try to read and finish the standard. Okay, shall we do it? Let us do it now. Now we can complete the entire standard in some 20 minutes of time. Let us have a look at it. So the auditor's responsibility relating to other information. First of all, sir, what is other information? So if you read the meaning of other information, financial or non-financial information other than financial statements and the auditor's report thereon included in the entity's annual report. So in the annual report, whatever information has been included, that could be financial or non-financial. And apart from financial statements and audit report, whatever information that has been included in the annual report, be it financial, be it non-financial, all that information we are going to call it as annual report. Sorry, we are going to call it as other information. So then what is the meaning of annual report? They have even given the definition of annual report also. Just let us go through the definition of annual report once. A document or a combination of documents. An annual report could be one single document or it could be a combination of documents also. More than one document also could be considered as annual report. So annual report could be a document or it could be a combination of documents prepared typically on annual basis. The name itself says annual report. We prepare it only once in a year, not every month. So a document or a combination of document which is prepared typically on an annual basis. And who will prepare that? Will auditor prepare that annual report? No, auditor is having no responsibility to prepare annual report. It will be prepared by management or those charged with governance. And how they will prepare that annual report? According to their own set of rules and regulations, or they will follow specific format, specific law, specific regulation. They will prepare that annual report in accordance with law, regulation, or some custom. So annual report is a single document or a combination of documents generally prepared on an annual basis by the management or by those charged with governance according to some law, regulation, or custom. And what is the purpose of that annual report? The purpose of the annual report, the purpose of which is to provide owners or other similar stakeholders with information on entities' operation. What are the entities' operations? And entities' financial results and entities' financial position as set out in the financial statements. So what is the purpose of preparing the annual report? The purpose of preparing the annual report is to communicate the important information to their stakeholders like owners and all, what kind of activities they are doing, what are their financial position, what is their financial statements. So to communicate all the things which are happening inside an organization and what progress they have achieved, what they are going to do, what is their financial position, what is their financial profitability, all this information the management wants to communicate to the stakeholders, that they will do it through the annual report. So tell me the definition of annual report once again. So definition of annual report is, it is going to be a single document or a combination of document and which is prepared on an annual basis, prepared by management and those charged with governance according to some law, regulation, or custom. The purpose of which is to provide owners or the relevant stakeholders with information on entities' operations and financial position and financial results as stated in the financial statements. So that document we are going to call it as annual report. Even we have shown you practically how that annual report actually looks like. Next, annual report contains or accompanies the financial statements and the auditor's report. Generally, in the annual report only financial statements and audit report will be there. and usually includes information about entity's development, its future outlook, its risk, its uncertainties, a statement by the entity's governing body, and reports covering governance matters. So hell a lot of information will be there in the annual report. Apart from financial statements, apart from the auditor's report, there will be lot of information. Next one. Coming to the next part. Objective. Sir, why this standard has been given? What is the purpose of the standard? What the standard is expecting from the auditor? The objective of the auditor, having read the other information. See here, what they are telling. As an auditor, your objective is to read that other information. So the objectives of the auditor, having read that other information, that means after reading that other information, you have to consider whether there is any material inconsistency between other information and the financial statements. You need to consider, is there any material inconsistency? Is there any material difference between financial statements and other information? And also to consider whether there is a material inconsistency between other information and the auditor's knowledge obtained in the audit. Whatever information that has been presented in the other information and whatever knowledge that you have obtained, is there any inconsistency? I gave you example for this also, like talking about the oil refining industry on an overall global economy basis. So your objective is to read other information. By reading the other information, to consider, is there any material inconsistency between other information and the financial statements? Also consider, is there any inconsistency between other information and whatever evidence auditor has obtained, whatever knowledge auditor has obtained. And in case if you find any inconsistency, you have to respond appropriately when the auditor identifies that such material inconsistencies appear to exist, or where the auditor otherwise becomes aware that other information appears to be materially misstated. If at all you find any inconsistency, and by finding that inconsistency you did the further investigation and you found out that other information contains some misstatement and all, then what you are supposed to do? Then you have to respond appropriately. Sir, how to respond appropriately? That's what I have explained. Communicate with the management, communicate with those charged with governance, consider the implications of the auditor's report, or if possible, withdraw from the audit. Able to understand? So that is what the meaning of responding appropriately. In case if you have compared, if you found out the inconsistency, if you investigated that further, and if you found out that other information is only containing something wrong, respond appropriately. How to respond appropriately? That we are going to see in the standard. Sir, I did the comparison, I found an inconsistency, and I determined that financial statements are only containing a material misstatement. That will not be covered by SA 720, that will be covered by SA 705. Give a modified opinion. If you have finally concluded by finding out the inconsistency, if you have determined financial statements are only containing a material misstatement, then you have to go to SA 705 and consider modifying your opinion. If you find other information only contains something wrong, then SA 720 will tell you what you are supposed to do. Able to understand the connectivity? This is how the standards concept has to be learned. Next one. And finally, to report in accordance with SA. So you have to even consider the reporting requirements also. How to report it? As I have told, use a separate paragraph, other information paragraph in your auditor's report. In that other information paragraph, you have to respond it. You have to report it. So you have to fulfill that reporting requirements also. So 4 objectives, guys. Respond everybody. Sorry. So what are the 4 objectives? Number 1. You have to read the other information to find out what is there any inconsistency, material inconsistency between other information, financial statements. Number 2, you have to find out is there any material inconsistency between other information and whatever knowledge that you have obtained. In case if you find any inconsistency and you found out that the other information only contains something wrong, you have to respond appropriately. And finally, you have to even consider reporting as per the requirements of this standard. Okay, right. Next one, 3rd paragraph, obtaining other information. Sir, before I can read, the standard is telling for me to read the other information. But to read the other information, first I have to get that other information. No? First I have to obtain that other information. Then only I can read, then only I can compare. So who has to get that other information? Management should get that other information. From whom? Sorry, auditor should get that information. From whom the auditor should get that information? From the management, he has to get that information. So generally what will happen is the auditor should sit with the management and ask them, sir, I have SA 720. As per SA 720, I have some responsibilities to fulfill. So you please give me what and all information you are expecting to include in the auditor's report. Sorry, annual report. As a management, you are responsible for preparing annual report, right? So please give me all the information that you are going to include in the annual report. I have told you all the contents. So whatever contents that you are going to give in the annual report, please give me all that information because I have to fulfill my responsibilities as per SA 720. So I am required to do my audit as per standards on audit, and one of the standard on audit, SA 720, is asking me to read the other information. So please give me, sir, all the information whatever you are going to present in the annual report, so that I can fulfill my responsibilities. Ask the management to get the copy of the other information. But do you think before the date of auditor's report only, generally we financial statements will be prepared, we do the audit, we give the audit report? No. Do you think before the date of auditor's report only, the management will prepare all their annual report? Do you think before I give my auditor's report only, before I give all my auditor's report, then only do you think management would have prepared all the other information? 90% of the cases it will not happen. So when generally management will try to prepare annual report is once the financial statements are over, once audit is over, and once auditor has given his audit report, once the figures are all freezed for the entire financial year, once entire books of accounts are closed for the entire financial year, then only the management will start working on other information. Then only management will start working on annual report. So in 90% of the cases, the annual report will never be ready. The annual report will never be ready before the date of auditor's report. But the standard is telling me I have to read other information, I have to read the annual report. But you are telling before the date of auditor's report, annual report will not be available. Then what I should do, sir? See, you might have been already doing the audits. If you are working in the big four entities, you will better know that. So what you will do is generally after the closure of the year, in case of listed companies, within 10 days, 15 days, audit will get closed. You will give the audit report. Then what the management will do? Then management will start working on preparing all that, compiling all that annual report and all. Sir, but SA 720 is telling before the date of in your auditor's report, you have to include the other information paragraph. In that, you have to comment on other information. But you are telling other information itself will not be ready before the date of auditor's report. What you should do? So what you should do is first, generally, if entire information is available, you can get it prior to the date of auditor's report only. If the management is ready with the annual report, you get it. But that will not happen. So if that is not happening, what I should do? What you should do is you start doing the audit. You give your audit report, but you ask the management to give a written representation. You ask the management to give a written confirmation that once the annual report related information is ready and before that annual report is issued, it has to be submitted to the auditor. Then the auditor will read it. If required, if he finds at the time of reading that, other information, if at all he finds any misstatements in the other information, then you have to issue a amended audit report making that changes in the other information paragraph. Nothing but SA 560 subsequent events will come into picture here. So very simple, guys. So as an auditor, before you can read other information, first you have to obtain all that other information. If before the date of auditor's report only, if all the other information is available, you are a lucky fellow. You get all that other information, you get that complete annual report, and you read that and take whatever action you wanted to take it through the auditor's report in the other information paragraph. But as I have told, in 90% of the cases, as on the date of auditor's report, annual report related information will not be ready. In that cases, what I will do before the date of auditor's report, I will ask the management to give me a written confirmation, to give me a written representation that once they prepare all the information regarding annual report and before they circulate it to the stakeholders, that other information will be submitted to the auditor, and also inform the management that once he receives the other information, he will verify all that other information. He will find any inconsistency. If at all he decides that there is a misstatement in the other information, the other information contains something wrong, you have to update that other information paragraph in the auditor's report. Or if you find that financial statements are only containing wrong information after the date of auditor's report, then you have to fulfill your responsibilities as per subsequent events. In SA 560, I have already told you what you should do in the case of subsequent events. That will come into picture here. Able to understand? So after the date of auditor's report, so let me put it this way. Let me try to present it in the form of chart. After, right, let me put it this way. As on the date of auditor's report, as on the date of auditor's report, other information is not ready. Now what you should do? You should obtain written confirmation. From whom? From the management. Regarding what? That once the annual report becomes ready, before circulation, they will send it to the auditor and auditor will verify it. Now at the time of and after verification, so once other information is submitted, Once other information is submitted, then what auditor will do? He will read other information. He will find inconsistency. He will find any inconsistency is there. If he finds any material inconsistency, he will investigate the further. If he finds out that financial statements are only materially misstated, if he finds out that, but he has already given audit report now. After he came to know that, after when he compared with the other information, then he came to know financial statements are only materially misstated. In that case, that will become a subsequent event. You are required to fulfill your responsibilities as per SA 560. Like discuss with the management, ask them to amend the financial statements. If they amend it, okay. If they don't amend it, you have to give new audit report containing a modified opinion. All this we have covered in SA 560. SA 560 will come into picture. If you find out that other information is only wrong, then what you will do? Then what you will simply do is, in the audit report, you will make changes. To what? To other information paragraph. You will make changes to other information paragraph and mention that other information contains what wrong has been given in the other information, that you will try to give a negative comment in your other information paragraph. That's it. So this is what you will do in case if the annual report is, in case if the information which is required to be included in the annual report is not ready as on the balance sheet date. Able to understand, everybody? So if you start reading it, obtaining other information, if you want to take a screenshot of this, you can take it. You can take the screenshot. If you want, you can take the screenshot of this. Done? Okay. So let us go through it. Obtaining the other information. The auditor shall determine through discussion with the management which documents comprises the annual report and the entity's planned manner and timing of the issuance of such documents. First, you have to go to the management, sit with the management, discuss with them what information they are going to include in the annual report and also when they are going to issue such documents. Go with the management and discuss with them. Next one, make appropriate arrangements with the management to obtain in a timely manner and if possible, see the phrase which they are using, if possible, prior to the date of the auditor's report, the final version of the documents comprising the annual report. It will not be possible. 90% of the cases, it will not be possible. So that's why they use the phrase if possible. So if possible, before the date of auditor's report only, if entire annual report is ready, get that final version of the annual report even before the date of auditor's report. When some or all of the documents, this point is important. When some or all of the documents determined in one, that is determined here, will not be available until after the date of auditor's report. That means if you came to know that all the documents which comprise annual report are not available before the date of auditor's report, they will become available only after the date of auditor's report. Then what you should do? Then you should request the management to provide a written representation that the final version of the documents will be provided to the auditor when available. So when finally after the date of auditor's report, when final version of the annual report is ready, it will be provided to the auditor and prior to the issuance by the entity, not after issuing. Prior to the issuance by the entity, you have to ask the management, sir, when your final annual report is ready, before you issue to the common public, you please share that annual report copy with me, such that the auditor can complete the procedures required by this essay, so that he can complete all the procedures required as per the standard, like reading and comparing for inconsistency and all. If at all he finds any inconsistency, what he is supposed to do, that I have already explained in the form of this chart. Clear? So this is what regarding obtaining other information. Very simple things, guys. You have to sit with the management, discuss with them what and all information they are going to include in the other information. And along with that, discuss with them what is the timing. If possible, prior to the date of auditor's report only, get the final copy of the annual report. If not possible, ask the management to give a confirmation that once the final annual report is ready, before the issue for the public, they will share that one copy with him and he will go through it once and he will fulfill the procedures required as per SA 720. Clear? Next one. Coming to the next part. Reading and considering other information. So as I've told you, the main objective is you are supposed to only read. Let us see what they're telling. The auditor shall read the other information, and doing so, he shall consider whether there is any material inconsistency between other information and the financial statements. You have to find out, is there any inconsistency between other information and financial statements. As the basis for the consideration, the auditor shall, to evaluate their consistency, compare selected amounts or other items in the financial information which are intended to be same like financial statements with such amounts or items in the financial statements. See, consider whatever has been told in the bracket, you can ignore it. So what they are trying to say here is, when you are reading the other information, you have to compare, you have to check whether there is any inconsistency between other information and financial statements. Sir, how can I do it? So check whatever figures they have given in the other information, check the relevant figures in the financial statements, find out whether both are matching or not. So try to find out whether there is any inconsistency between financial statements and other information. And also we need to consider whether there is any material inconsistency between other information and the auditor's knowledge obtained in the entity in the context of audit evidence obtained and conclusions reached. Nothing but second inconsistency. You should find out whether other information is inconsistent with whatever knowledge that you have obtained. Same like objective paragraph only, whatever they have told in the objectives, that only they are elaborating. When you are reading the other information, you have to make sure that whether there is any material inconsistency between other information and financial statements. Should also consider whether there is any material inconsistency between other information and whatever knowledge auditor has obtained. And while reading the other information in accordance with above, the auditor shall remain alert for indications that the other information not related to the financial statements or the auditor's knowledge obtained in the audit appears to be materially misstated. And when you are reading, you have to always remain alert. Nothing but you have to always maintain that professional skepticism. Is there any chance, is there any possibility of other information getting misstated? That's professional skepticism you have to maintain. Maintaining that professional skepticism only, you have to read it. Okay, so don't read it with a preconceived notion that every other information will be correct only, why management will convey wrong information. Don't go with that blind acceptance. Always remain alert, maintain the attitude of professional skepticism. There is always a possibility of other information getting wrongly stated, so maintain that professional skepticism, maintain that alertness. So these are the points which you need to keep in mind while you are reading and considering the other information. Then finally, responding when you find a material when a material inconsistency appears to exist or other information appears to be materially misstated. Now finally, you read the other information, you found that there is a inconsistency between other information financial statements. Now what you should do, since you found inconsistency, you need to determine, is that inconsistency is because of misstatement in the other information, or is it because of misstatement in the financial statements? That you need to find it out. So that's what they are telling. If the auditor identifies that a material inconsistency appears to exist or become aware that other information is to be materially misstated, the auditor shall discuss this matter with the management. First, you have to go and discuss with the management. For example, other information is saying some revenue, financial statements is saying some other revenue. First, you have to go and discuss with the management. Sir, in the other information, you have told this much figure of revenue. In the financial statements, you are telling this much figure of revenue. Why this inconsistency? Sometimes there might be valid and genuine reasons. Management will try to explain. If the management is not trying to explain, that means that something is wrong there. So first, if you find any inconsistency, what you are supposed to do? Go to the management, sit with them, discuss about that inconsistency, ask the reasons. And if necessary, perform other procedures to conclude whether a material misstatement exists in the other information only, or a material misstatement exists in the financial statements, or is there any requirement to change the auditor's understanding is there any requirement to update the auditor's understanding? Clear? Why? Because sometimes inconsistency can happen in the other information and the knowledge obtained by the auditor. So if at all you find about any inconsistency, determine whether there is a misstatement in the other information, or there is a misstatement in the financial statements, or if there is an inconsistency between other information and knowledge of the auditor, you have to determine, did you understand, did you have a wrong knowledge till now? If that is the case, determine, is there any requirement to update your knowledge of the client business? You had some understanding regarding the client's business, but when you read other information, you found inconsistency. Determine, is other information only wrong, or is there any requirement to change your understanding regarding the client's business? So if you find that there is a material misstatement in the other information only, then SA 720 will come into picture. What SA 720 says, like request the management, ask them to change, correct and all. In case if there is a material misstatement in the financial statements only, then what will happen? Then you have to follow SA 705, consider giving the modified opinion. If you feel that no, whatever knowledge that you have obtained, that is only wrong, you need to update your knowledge regarding client's business, then what will happen? Reassess your risk of material misstatement, SA 315, and reassess your materiality levels, reassess and properly make changes to your nature, timing and extent of audit procedures, SA 330. So once you find any inconsistency, you have to investigate that further and what course of action has to be taken. If you find there is a misstatement in the material, there is a material misstatement in the other information only, go and fulfill the requirements of SA 720. If you find that financial statements are only containing a misstatement, go and consider giving a modified opinion, SA 705. If you feel that no, whatever knowledge I have obtained is wrong, I need to update my knowledge of the client's business, then you need to make the changes to your risk assessment process, make changes to your audit procedures. Clear? So this is what you need to, this is what the next step. Once you find inconsistency, determining what is wrong is the next step. Now, if you conclude, finally, if you have decided that, okay, my other information is only containing a material misstatement, then what you should do? Let us see. Responding when the auditor concludes that a material misstatement of the other information exists. After finally analyzing, investigating and all, auditor has determined financial statements are correct only, my other information is only wrong, then what he should do? If the auditor concludes that a material misstatement of other information exists, the auditor shall request management to correct the other information. What you should do? Go to the management, request them, sir, please do the correction. If management agrees to make the correction, well and good. The auditor shall determine that the correction has been made properly or not. Management told, okay, sir, we will agree with you. We will make the changes to the other information. They told, after some time, they came and told, okay, sir, we have corrected the other information. Will you check it once again or not? I will check it once again whether they have done the correction properly or not. In case if they refuses to make the correction, I'm going to the management and telling, sir, please check the other information. Management is telling, get lost, we will not correct it. If the management refuses to make the correction, the auditor shall communicate the matter with those charged with governance and request that correction be made. So then you have to go to the those charged with governance, sir, your management is not correcting the other information. Please advise your management to correct it. Go and communicate with the those charged with governance. If the auditor concludes that a material misstatement in the other information obtained prior to the date of the auditor's report and the other information is not corrected after communicating with the those charged with governance. So they are telling about the first case. In case you got all the annual report, all other information prior to the date of auditor's report only, and you came to know in that annual report something is wrong. You requested the management, they did not correct it. You asked the those charged with governance, they did not cover it, they did not correct it. Then what you will do? Whatever audit report that you are about to give, in that audit report, you will consider the implications. What do you mean by considering the implications? In the audit report, under the paragraph other information, you will try to mention that fact which other information contains wrong. This when you can do if you got the annual report prior to the date of auditor's report. You got all the annual report prior to the date of auditor's report only, and if the management is not correcting, then whatever action you wanted to take, that action you can take it through the audit report. So that to which action in the other information paragraph you will tell that fact. The same thing they are telling, if the auditor concludes that a material misstatement exists in other information obtained prior to the date of auditor's report. If you got all the annual report prior to the date of auditor's report only, and your and other information is not corrected after communicating with the those charged with governance, you went and communicated with the those charged with governance, but still management did not correct it, then the auditor shall take appropriate action. What appropriate action he has to take? Consider the implications for the auditor's report and communicating with the those charged with governance and how the auditor plans to address the material misstatement in the auditor's report. So you have to consider implications for the auditor's report. That means you have to consider giving a negative comment in the other information paragraph, and even you have to communicate with the those charged with governance also once that you are going to say like this in your auditor's report. Like as we have seen in SA 700 series also, if you want to give modified opinion, communicate with the those charged with governance once. If you want to use emphasis of matter paragraph, communicate with the those charged with governance. In the similar manner, if you want to give negative comment in the other information paragraph, that also you communicate with the those charged with governance. Sir, I told you to correct other information, you did not correct it. So what I am doing, I am going and changing my other information paragraph. I will give a negative comment there. So you have to communicate with the those charged with governance and take appropriate action in your auditor's report. And in extreme circumstances, even you consider withdrawing from the engagement where withdrawal is possible and permissible under applicable law or regulation. Next one. Sir, if the auditor concludes that material misstatement exists in the other information obtained after the date of auditor's report. Now what will happen is, now they are talking about, take for example, financial year 23-24. Financial year will end on 31st of March 2024. You gave the audit report on 15th of April. 15th of April, you gave the date of auditor's report. Now, before the date of auditor's report, annual information is not yet ready. Annual report is not ready. Other information is not ready before the date of auditor's report. Then what you will do, as I have told, I will take a written confirmation from the management. So management has given me written representation that once the annual report is ready, they will submit that information to the auditor for review. Okay. So taking that written confirmation, I signed my audit report on 15th of April. Later, annual report got ready on 30th of April 2024. Now what the management has done is, management gave me that copy of the annual report. Now I have already given my audit report when on 15th of April itself I have given my audit report. Now on 30th of April, as management has given me the confirmation after my audit report date, when annual report is ready, they gave that entire copy of the annual report to me. Now when I started reading the annual report, I found inconsistency. When I started reading the annual report, I found what? Inconsistency. Inconsistency between what? Other information and financial statements, or other information and whatever knowledge I have obtained. Now what I should do, sir? I have already given my audit report. No, what I should do? As I have told, you can take the legal advice here. Since you have already given audit report, you can go and consult a legal advice, what you can do. But generally in these circumstances, what you will do is, if in case if you have already given audit report and if you concluded that other information is only wrong, what you will do in the audit report, you will make change. Whatever audit report that you have already given, to that audit report, you will make one change. What change you will make? In that other information paragraph, you will give a negative comment. In case if you find that financial statements are only wrong, but you have already given the audit report, now what will happen? Now it will be covered by subsequent events. Like you will ask the management to amend the financial statements. If the financial statements are already circulated, you can give a public notice. You will ask the management to take some action to stop the people from relying on the auditor's report. If the management is not taking appropriate action, as an auditor, I have to take the appropriate action to stop the people from relying on the auditor's report. So all that SA 560 matters will come into picture. This is what will happen in case if the management has given you other information after the date of auditor's report and they're not correcting the other information. Let us see what they're trying to say here. Yeah. If the auditor concludes that material misstatement exists in the other information which you have obtained after the date of auditor's report, first the auditor shall, if the other information is corrected, if the management has corrected other information, check whether procedures necessary in the circumstances. If they have agreed and corrected, for example, let us come back here only. After the date of auditor's report, they gave me other information. I found that other information contains wrong. Here also first I will ask the management to correct it. If they correct it, well and good. I will check whether they have done the correction properly or not. When they did not correct it, then what I will do? If the other information is not corrected, even after communicating with those charged with governance, take appropriate action. Consider the auditor's legal rights and obligations to seek to have uncorrected material misstatements appropriately brought to the attention of the users for whom the auditor's report is prepared. In case if the management is not agreeing to change the other information, you have to take the appropriate action. And what could be the appropriate action? As I have told, change your audit report, give a negative comment in the other information. In case if the audit report is already circulated, ask the management to give a public notice that don't rely on that audit report and give a new audit report and ask the management to circulate this new audit report once again similar to SA 560. All that formalities you have to fulfill. Clear, everybody? Let us come to the next part again. Let's able to understand how you have to respond in case if you find a material misstatement in the other information. Hope you are clear with us. Next one. Responding when a material misstatement in the financial statement exists or the auditor's understanding of the entity and its environment needs to be updated. Sir, if there is a misstatement in the other information, what we have to do? We have already seen it. Sir, what if after evaluating inconsistency, I found out that my financial statements, my client's financial statements are only wrong? You have to take appropriate action. What will be appropriate action? SA 705. No, sir. There is a requirement to change my understanding only. Other information is correct. I need to change my knowledge. Then you have to take appropriate action like reassessing the risk of material misstatement, doing the risk assessment procedures once again. So that they will simply try to wind it up here. If as a result of performing the procedures discussed above, the auditor concludes that a material misstatement in the financial statement only exists or the auditor's understanding of the entity and its environment need to be updated, the auditor shall respond appropriately in accordance with relevant essays. So what essays will be there? SA 705 and SA 300 series, 300, 315, 320, 330, etc. Next one. Finally, they talk about reporting. So let us see what is the reporting requirements here. The auditor shall report, in the auditor's report shall include a separate section with a heading, other information or some other appropriate heading when at the date of auditor's report. For an audit of financial statements of a listed entity, the auditor has obtained or expects to obtain the other information. So in the other information paragraph, as I have told, whatever matters you want to communicate regarding other information, you have to do it through other information paragraph. So you have to tell in the other information paragraph, in case of listed entity, did you obtain all the other information, or you are about to, or you will obtain the future information, or you will obtain the other information later, that you have to give a comment. So for an audit of financial statements of a listed entity, either the auditor has obtained, did you already get that annual report, or expects to obtain, or you expect to obtain it later, you have to give the comment. For audit of financial statements of unlisted corporate entity, the auditor has obtained some or all the other information. See, in case of unlisted entity, annual reports will not be very huge. Annual reports will be very small. In case of unlisted entities, generally before the date of auditor's report only, entire annual report will be ready. I showed you that Reliance company's annual report is 300-400 pages. But if you take any unlisted company, annual report will be hardly some 20-30 pages. So in case of unlisted company, you will have an advantage. You will generally get it even before the date of auditor's report, every information. So whatever it is, you have to give a comment in your other information paragraph. Generally, in the case of listed entity, you will get it before the date of auditor's report, or you will expect to get it after the date of auditor's report. But in the case of unlisted corporate entity, the auditor will get all the information even generally before the date of auditor's report only. So you have to give the comment whether did you get the information or you are about to get the information. When the auditor's report is required to include an other information section, this section shall include a statement that management is responsible for other information. Sir, what exactly I have to present in the other information paragraph? I have already shown you practically that other information paragraph. What is there? First, they have told who is responsible. Who is responsible? Management is responsible for other information. Then you have to identify other information. What is there in the other information? If any, obtained by the auditor prior to the date of auditor's report. In case if you have already got the other information prior to the date of auditor's report, tell them what is included in that other information. For an audit of financial statements of a listed entity, other information, if any, expected to be obtained after the date of auditor's report. In case if you did not get it, if you are expected to get it, tell that I did not get the other information yet, I will get it in the future. Then a statement that auditor's opinion does not cover the other information, and accordingly that the auditor does not express an audit opinion or any form of assurance. If you remember, the same exact paragraph is there in the other information paragraph. So this one, our opinion is only on standalone financial statements. We do not express any form of assurance on other information. This statement you have to add it. Next, coming to the next one. Next, a description of the auditor's responsibilities relating to reading, and even you have to add one line that you are responsible only for reading and considering the other information. That line also will be there in that respective paragraph. Next one. When other information has been obtained prior to the date of auditor's report, if you already got all that other information prior to the date of auditor's report, a statement that nothing to report. If you did not find anything wrong, you will say there is nothing to report. If the auditor has concluded there is an uncorrected material misstatement of the other information, then he will describe what is that misstatement on the other information. If you pay attention, Reliance Industries Limited auditor told he has nothing to report. Why? Because he did not find anything wrong in other information. On the other hand, if he would have found anything wrong in the other information, he would have explained about that mistake in the other information. But in the case of Reliance Industries Limited auditor, since he did not find anything wrong in the other information, he just added one line, we have nothing to report, he told. In case if there had been something wrong, he would have explained that here in a detailed manner. Next one. Okay. So when the auditor expresses a qualified or adverse opinion in accordance with SA 705, modifications to the opinion on the independent auditor's report, the auditor shall also consider implication of the matter giving rise to opinion. Nothing but in case if you have finally concluded there is no misstatement in the other information, there is a misstatement in the financial statements only, then what you will do? We will generally try to modify the opinion, no? So when you modify the opinion, you have to ensure that compliance of the SA 705. Write it here in the bracket, in case financial statements are materially misstated. In case if other information is materially misstated, we take action through that other information paragraph. In case financial statements are materially misstated, then we modify the opinion and we comply with the requirements of SA 705. Next, reporting prescribed by law or regulation. This is not important, but anyhow I will read it once. Sometimes what will happen is, apart from the standards on audit, some law and regulation wants you to report on other information. Some law or regulation other than standards on audit, some other law or regulation might ask you to say something in your audit report regarding other information. Then you have to fulfill that law and regulatory requirements also. Let me give you an example. Take for example, you are commenting, you are doing the bank audit. Now as per the bank audit, in the bank audit also SA 720 will become applicable. SA 720 will ask you to comment something regarding other information. Now in addition to that, the Banking Regulation Act is there. Now the Banking Regulation Act is also putting some reporting requirements on the auditors of the bank regarding other information. Now you have to fulfill that reporting requirements on other information as per the Banking Regulation Act also. Sir, can I prepare one single paragraph in my audit report giving references to both laws and regulations and SA 720 also? Under SA 720 also, I have some reporting responsibilities regarding other information. Under law and regulation also, I have some reporting responsibilities regarding other information. Sir, can I fulfill both the reporting requirements under one single paragraph? You can do it provided requirements of both are complied. Requirements of both are complied. If you are complying with the responsibilities of Banking Regulation Act also, even if you are also fulfilling the responsibilities of SA 720 also, if both are getting complied, then you can refer both in a single paragraph. Now, if the requirements of both are different, you give a separate paragraph the reporting requirements for Banking and Regulation Act. You give a separate paragraph for reporting responsibilities on other information as per SA 720. If both the requirements are getting fulfilled in a single paragraph, you can cover both the reporting requirements under applicable law or regulation and also standards on audit SA 720. This is what simply they try to say that. If I summarize it here, if the auditor is required by relevant law or regulation to refer to the other information in the auditor's report using a specified layout or wording, the auditor's report shall refer to the standards on auditing only if the auditor's report includes at minimum identification of other information obtained by the auditor prior to the date of auditor's report, a description of the auditor's responsibilities with respect to other information, and explicit statement that addressing the outcome of the auditor's work. Nothing but if you are required to prepare, if you are required to report something on other information as per law and regulation, you can refer to the standards on auditing only when the requirements of standards are met. Sir, what are the requirements of standards? That you have to obtain the information, that you have to identify what is the information which is required to be included in the auditor's report. And also you have to describe your auditor's responsibilities. And also you have to give an explicit statement. What is the outcome of the auditor's work? That means, did you find something wrong? Did you not find anything wrong in the other information? That explicit statement also should be there, explaining what is the outcome of your auditor's work. Simply, if I have to put it, if the requirements of standard on auditing are also complied, then you can give reference. Okay, this paragraph I am preparing in my auditor's report as per law and regulation, as per standards also. In case if you are not fulfilling the requirements of the standard, don't give reference to the standards on auditing. Able to understand? Even if you are unable to understand also, ignore it, but I hope you would have understood it. So if there is a requirement of reporting under law or regulation, if there is a requirement of reporting under standards also, if both the requirements are getting complied with, give reference to both in your auditor's report. If only one requirement is getting fulfilled, give reference to only that one requirement. Clear, everybody? So this is what regarding reporting prescribed by law or regulation. You can read it once and you can ignore it. Clear? Comfortable, everybody? So these are the reporting responsibilities of the auditor regarding other information. I hope the standard is very interesting and you have learned that standard now. Just give me one quick response if you are able to understand the standard SA 720. Are you all clear? Right. So now if you have a summary, what and all we have discussed in this standard. First, we understood what is other information. We understood what is annual report. First of all, what is other information? Any information other than financial statements and the auditor's report in the annual report, that we call it as other information. We understood what is the definition of annual report also. Now, what are the objectives of the auditor? The auditor shall read other information, find out is there any material inconsistency between other information and financial statements, and also find out is there any material inconsistency between other information and knowledge obtained by the auditor. If at all you find anything wrong in the other information, you have to respond appropriately and you have to report in accordance with the requirements of the standard. 4 objectives. Good. Then what you should do? You have to, in order to read the other information, first you have to get that other information. So first what you should do is discuss with the management, determine what and all information will be included in the other information. If possible, try to get all that other information prior to the date of auditor's report. If it is not possible, at least try to ask a written representation from the management that they will give the other information once it is ready before issuing it to the public. This is what you should do. Next, what you should do, once again repeated paragraph, you have to read and consider the other information. When you are reading other information, you have to pay attention. Is there any material inconsistency between other information and financial statements? Is there any material inconsistency between other information and knowledge obtained by the auditor? And then finally, you have to always remain professional skepticism. You have to remain always alert that there could be a possibility of misstatement in the other information. If you find that material inconsistency, if at all you found that differences, you need to determine, you need to discuss with the management, you need to analyze that and finally determine, is the other information only wrong, or the financial statements are only wrong, or is there any requirement to update your understanding regarding the client's business. Then if you have finally decided there is a misstatement only in the other information, what you should do? First, you have to go and discuss with the management to correct it. If they did not correct it, you have to go and communicate with those charged with garnets. If you have already received the information prior to the date of auditor's report, and neither the management nor those charged with garnets, no one is correcting the other information, then what you can do? Then you can consider the implications on the auditor's report. That is, you can give a negative comment in that other information paragraph. In extreme circumstances, you can also withdraw from the engagement if withdrawal is permissible. In case if you did not get the other information prior to the date of auditor's report, you have already given the auditor's report. After the date of auditor's report, you got other information and you concluded the other information contained a mistake, and neither the management nor the auditor, neither the management nor those charged with garnets, no one is correcting the other information. Then what you should do? You should consider your legal rights and obligations. You could take even legal advice also. You can ask the concerned persons, you can ask the management and all to take appropriate action to stop the people from relying on the auditor's report and all. Like SA 560 we have done, same thing we will do it here. Next, in case if you find that no other information is correct, financial statements are only materially misstated, or you need to update your understanding, then you have to apply relevant standards like SA 705 and SA 300 series you have to bring into picture here. Then the matters which are required to be reported. In the auditor's report, you have to use a separate paragraph, other information. In that paragraph, you have to tell whether you have obtained information or you are about to obtain the information. So that you have to comment. Generally, in listed entities, we will obtain it only later. In unlisted entities, we will get it generally before the date of auditor's report only. And in that other information paragraph, what you should say? You should say who is responsible. You have to identify what is included in the other information. And you should also say that you are expressing the opinion only on the financial statements. Your opinion is not related to other information. And also you have to describe what are your responsibilities relating to other information that you are only required to read it, that you have to convey clearly. And sometimes law or regulation also will tell you to report on other information, fulfill that reporting responsibilities as per law or regulation also. And if you are complying with all the requirements of the standards on auditing, then you can give reference to SA 720 also. Understood? So this is what SA 720 is all about. I hope with all the background discussion, with all the practicality which we brought into the chapter, this is brought into the standard. I hope this is very, very easy. Okay, so we'll take one short break. We'll meet after the break. Okay, we'll take a break of 10 minutes. After that, we'll meet again. I'm not leaving you guys. We started the class late today. We started at 7:30. So I want little bit of your extra time. As I've already told you, being a Sunday, please afford that time for me. So we'll take 10 minutes of break. After the break, we'll come back and resume our discussion.